Well, here we go. Another trade round. This time we're getting retaliation promise coming from China just after the U.S. announced their own $50 billion worth on tariffs of Chinese goods. Yet the markets in the U.S. seem to recover their initial big dip, if you will. Are investors right to be hoping that this ultimately doesn't end in a trade war?
Well, there'll be a big hope. I think you can't expect that to happen. I mean, yes, if you look at the $50 billion in tariffs, that's not a big, that doesn't have a big impact on the U.S. economy. Perhaps 0.1%, 0.2% of U.S. GDP could be shaved because of that $50 billion. The bigger concern is not the $50 billion. The bigger concern, I think, is the escalation. The tit for tat, that 50 could become 150, 200, 300. That becomes a problem for the US. That becomes a problem for the rest of the world. I think somehow the US market is responding slightly more positively, I think, because of the fact that, Trump has announced tax cuts, fiscal stimulus. The US economy is actually doing better than other regions. So I think that's helping the market somewhat. But if this escalates, I think it will impact the US market as well in time to come.
And so far, we are seeing a pronounced impact right here on the Asia session. We should point out what we were showing earlier with the South Korean chip makers. And you point out this isn't just about US-China. It's the rest of the world, products that are so interlinked with these trade flows.
That's right.
So from that standpoint, as an investor, where do you go?
Well, I think you got to be cautious at this juncture. This is still playing out. It's still too early to jump in and, try and bargain hunt for stocks right now. I would wait, I would watch, because remember, in 2 weeks' time, the US is going to announce investment restrictions on China. It remains to be seen how China will react to that. China has retaliated, and Trump has promised that he would, up the ante because of, he says, if China retaliate, we're going to impose even more tariffs on China. So let's see whether he keeps all that. He said he actually fulfills that promise. So this is still playing out. The next 2 or 3 weeks is very, very important. And I think you want to wait and watch. And as an investor, I think bargains are starting to emerge. As long as the global economy doesn't get too badly hurt, because stocks have pulled back very sharply, they could pull back another 5% more, maybe even more than that. Or even 10%. But if it doesn't impact the global economy and somehow the US and China back off, then it becomes an excellent buying opportunity. But I think it's still early days.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.